The futures this morning are marginally higher. Join us now. You can see 134 points on the Dow. Jason Trennert, Chairman and CEO of Strategic Research Partners, a Baird company. Jason, we haven't seen you in a while. Were you surprised by either the break in the averages leading into Liberation Day or with the swiftness of the rebound to new highs following Liberation Day? Were you surprised by did you predict either?
I didn't. We didn't predict either, and I think I was surprised by both moves. I have to say, it's one of the strongest moves off a bottom there's ever been, and I think there was an overreaction to Liberation Day. I think people are starting to get accustomed to President Trump's negotiating style and starting to get accustomed to the idea that you can't react to every headline that you see, that things are likely to change, because everything is a negotiation. Everything is a trade-off. And that's the way the world is right now. We're deglobalizing, and that tends to lead to more, I would say, more political uncertainty. So we were surprised by both moves. We're happy about the move up.
Is there any way that the story today, buybacks are in vogue, and obviously there's money on the sidelines, and the economy has been, hanging in there pretty well. Are things happening in spite of all these things in the stock market, or can you actually credit some of them? I mean, maybe the big, beautiful bill, maybe the expensing, maybe the deregulation, but are you convinced that the tariffs are a headwind, that we're still going to see the negative effects, or there really aren't as many? It's been overstated.
Joe, I would say you just mentioned it in brief. I think the big, beautiful bill, in my opinion, is a big part of the reason why the stock market is where it is, because I'm very, as you know, a very supply side person. And I like the idea of incentivizing capital investments, which the big, beautiful bill does. So I think that's overriding the tariffs. I think markets, I tend to trust markets more than I trust people like myself, or economists, or strategists. And I think the markets, not only the stock market, but also the credit markets, I think are telling you that the economy can be robust to the tariffs, and is going to, from a longer term perspective, react to the incentives and, as you said, the deregulation that's being put in place.
I don't know if you're a Reagan Republican or a classic conservative, whatever you want to phrase it, does any of this border on industrial policy? The NVIDIA news today, some of the president puts pressure on corporations to do things, and wants everything built here. All these things aren't classical conservative ideas. Do you have any problem with any of it?
Joe, I have to say, as you know, I was about ready to go into the administration, and circumstances changed for me in terms of my health. But I'm a little hesitant to criticize the administration. But I will say I like free markets, and I don't like industrial policy. I think free markets are the best way to allocate capital. I know there are national security issues, and those are other considerations that we have to keep in mind. As I said before, we're deglobalizing, so things are a bit different. But it is not part of the Reagan Republican conservative supply side playbook. But there are clearly other forces, perhaps national security issues, that are at play.
Well, there's that, and there's I don't know where we are right now in terms of total money taken in for tariffs, but it's adding up. Might be $500 billion, or could be eventually.
Right.
And then this is money. This is real money, too. So, I mean, is it that simple? Can you just swallow some of your principles and say, look, the government needs the money?
Well, listen, Joe, there is, I think, an element of the idea that the tariffs, sterilize a little bit of the one big beautiful bill. If you were worried about deficits because of
Right.
the big beautiful bill, you say, well, you have tariffs on the other side that will help that out. And so, you can swallow some of your
Right.
principles in that way.
Well, what would
I
you
also
rather?
do understand that Mitt Mulvaney was on earlier. I do understand the populist part of
Yeah, right.
this, which is to say that a lot of the policies, the globalization policies that we've had for the last 20 years, China joining the WTO, very good for the Chamber of Commerce, very good for the C-suite of American companies, but not good for the average guy. And I think that's what President Trump is getting at by these tariffs. That you say we
I mean,
need to have.
the tariffs are, you could raise taxes on corporations, or you could do tariffs. You could put a 15% export tax on everything, or just do it on NVIDIA and AMD. It's almost like, if you were only interested in principles and being totally consistent, you wouldn't do these things. But is there any way, obviously you just said you are, you can sort of look away, sort of ignore it and just say, look, money's coming in. The president's going to do what he's going to do until someone stops him. Is that a bad way to look at things?
Listen, Joe, maybe the more important thing is how's the market reacting to it?
Right.
My opinion, of course, doesn't matter. Through the fact that I'm conservative and a supply side person, it doesn't matter. You're looking at what's going on here. The big four technology companies are probably going to spend $300 to $400 billion in capex this year. I mean, that in and of itself is almost like, in the old days, that would be like a fiscal stimulus.